Thank you, Tim. And I note we have nearly 180 participants online at the moment, so fantastic opportunity to talk to you. Great opportunity today to talk to you about Gascoyne Resources. We're an attractive WA gold exposure, 100% in WA. We're a producer of gold, produced over 80,000 ounces last year. We have a stable and improving balance sheet with a 7-year mine life, and we're attractively valued compared to our peers. And this short presentation will take you through that in the next 10 minutes. If we go to the next slide, there's a short video that just shows the operation at Dalgaranga. So the company has a small, very experienced board with George Bork, Rowan Johnston and myself. We're heavily involved in the company, and we have a tight structure, 251 million shares on issue with a market cap of 144 million as of yesterday. We've got a tight holding with our top 3 shareholders owning over 40% of our register. And the next slide, thanks. Very importantly, at the end of 31 December, we were actually net cash positive to the tune of almost $1 million. An excellent outcome after reinstatement back on the ASX back in October last year. But we've got an excellent balance sheet ready to fund growth. In addition, our hedge facility is over 53,000 ounces at north of $2,600 per ounce. One of the best positive mark-to-market hedge positions in the industry. In addition, that strong balance sheet has actually allowed us to, as a board, to double our exploration budget to 6.3 million this financial year. And we're aiming to drill approximately 70,000 metres by the end of this year. On the next slide, you can see there on a couple of measures of EV to production ounce that compared to our peers, we're attractively valued. And also on our AISC, you can see we're also attractively valued compared to our peers. Moving to the next slide, we'll cover a bit on the Dalgaranga Operations. As you can see on the area on the right-hand side there, you can see the main Gilbey's pit. That's our main source of ore. It is now reliable, consistent grade, and the troubles of the past are well and truly behind us. Up in the northeastern corner of that area, you can see our 2.5 million tonne capacity mill with the Gilbey's, the Plymouth deposit and the Sly Fox just around the corner, less than 1.5 kilometres from that plant. We're now achieving very good consistency, month in, month out, quarter in, quarter out. That plant is a key asset of ours, and it is at industry low, less than $14 per tonne. The approach that we're taking on the mining lease is that we have excellent opportunities to grow the 7-year mine life by resource definition drilling in the southern end of the Gilbey's pit at Plymouth and at Sly Fox. I'll cover a bit more on our exploration upside shortly, but we can see some excellent opportunities to extend our mine life. Next quarter, we're aiming to put out our updated resource and reserve. As I mentioned, the processing plant, you can see a photo of it down below there. It's only 2.5 years old. It is truly a key asset of ours. It's low cost, simple and efficient. And in recent times, we've been exceeding the design capacity by approximately 5 to 7%. And we aim to continue our focus on continuous improvement on that plant to see if we can't push that even further. On the left there, you can see that geographically, Gascoyne is very, very nicely located and with several deposits in the region less than 100 kilometres away. And I'll cover that in a minute, but it's very nicely located. Next slide. I'll now talk about our growth opportunities. As I mentioned, Dalgaranga is a key processing hub. We intend to do and employ our balance sheet to do our resource definition drilling on the mining lease. Brownfields targets on the mining lease, there's several of those that we will drill in the near term. And importantly, we have over 500 square kilometres of exploration tenure immediately around the Dalgaranga mine itself. And we've been drilling with Aircore and RC. And on that slide there, you can see a little brown square. That's our next slide that we'll go to shortly. But the Greencock trend is over 25 kilometres long of a very, very structurally complex trend that we have just got heritage clearances, and we intend to put about 25,000 metres of Aircore along that very long trend. Next slide, please. On our next slide, this is the tank array, which is that small window in the last slide. It shows where we were drilling just before Christmas. We did 10,000 metres of Aircore, and one of those holes you can see there, 28 metres at 1.5 grams. We got very excited when we saw that and moved the RC rig from the resource definition drilling straight across, and we drilled a hole straight underneath it and got 8 metres at 3.1 grams per tonne. We followed that up very shortly afterwards with another 2 holes and ended up with 9 metres at 7 grams, including 3 metres at 15.4 grams. And more importantly, that is in the fresh rock. Around the Dalgaranga region, there is a very, very strong depletion zone in the top 40 to 50 metres, and it's very important to drill through that with the Aircore drilling. Next slide. This slide just shows the successful drilling that we have achieved on the mining lease. That's the resource definition drilling. The top picture shows the holes that we put in the southern end of the Gilbey's mine and the successful intersections of 13 metres at 2.1 and 44 metres at 1. Just around the corner, as was shown on that aerial photograph back on the previous slides, the Plymouth and the Sly Fox deposits, we've put a number of RC holes into there and that's actually shown that the Sly Fox in particular has some very good true widths and good intersections. We're planning to put another 3 to 4 much deeper holes and diamond holes in the near future to see the underground potential. On the next slide, this covers our regional exploration growth potential. About 300 kilometres to the north of Dalgaranga, we've got the Glenberg Mount Edgerton project. There's currently 510,000 ounces in resource there, and we're looking to grow that to circa 700,000 ounces, which will give us an opportunity to potentially develop that into a new producing centre. In addition to that, our Mumberkine well up to the northeastern section there, and I invite you all to look at the appendices. There's a couple of slides that explain more on this at your leisure. But Mumberkine well is adjacent to Capricorn Metals' Karlawinda project that they're developing. We've got some very new aeromagnetics, which is a pretty exciting targeting tool for us. Next slide. This is a slide that just shows you the resource areas for the Glenberg deposit. We have a really robust resource estimate there using pit optimizations to ensure that there is a future likelihood of economic extraction. It's a granted mining lease. There's been numerous studies already completed there, which will assist us should we look to develop in the future. Moving to the next slide. So it's a very short presentation, but the highlights are essentially that we, as a company, are now producing reliable ore from the GMZ or the Gilbey's pit. Last year, we produced 80,000 ounces and we're cash flow positive. We've got a very stable balance sheet after recapitalising the company last year. Cash flow positive operations with an excellent forward hedge, well in the money, considering the current spot price. Next quarter, we're looking to put out a 3-year outlook, resource and reserve update. In addition, because of that stable balance sheet, we doubled our exploration budget to 6.3 million through to 30 June this year. And we have been progressing our resource definition drilling and a little bit of early success exploration-wise at the Tanqueray deposit. And we're currently following that up with RC drilling. The Greencock trend, over 25 kilometres of that very interesting structure to test, and that will be going from next month all the way through to June. And up at Glenberg and Mount Egerton, there's very strong potential for the Egerton to have a high-grade sweetener that can be trucked through to a Glenberg processing plant. So all in all, when you look at Gascoyne relative to our peers, we're an attractive investment option in the gold space. Thank you very much.
Thanks, Richard. Just a question. You've got a very strong balance sheet. What about acquisition opportunities as well as exploration?
Certainly, everything's on the radar at this point in time. However, our number one focus is organic growth with the fantastic exploration upside that we really haven't had any money to spend on for the last 4 to 5 years. And so we're looking forward to employing the cash and the operational cash flow from our very strong balance sheet and look to our organic growth first. If there are attractive M&A opportunities, we'll certainly look at those.
And what about the hedge book? Can you talk to that a little bit more in detail? How is that managed?
So we actively manage that on it's an 18-month rolling hedge book. There is a mandatory 40% with the Investec loan, which we drew down on the 20th of October last year. As 1 month rolls off, we tack on another month. There is another 10% discretionary hedge. And that allowed us last year to strike an excellent position. And that's seeing us seeing over a $2,600 average realised price in recent times, considering the today's price of 22.30 Aussie. We're well and truly in the money.
And is that over all production, or is that a percentage of production?
It's over 50% of our production over the next 18 months, but approximately just over 50,000 ounces. So we do have opportunity if the spot price rises to sell into that. In addition, for this calendar year, we have another 14,000 ounces of puts in place at 2,300. So in terms of the gold price we'll receive over the next 18 months through to 30 June next year, we're in an excellent position.
As an ex-derivatives trader, you're talking my book, so to speak. But can you talk about the register? You've got NWR Holdings, which is a listed resource and infrastructure contractor with a large position. How did that come about?
So NRW are our main mining contractor on site, and through the difficulties that occurred some 2 years ago, we worked very closely with them to stay with us as our mining contractor. They're still on site. They're a very, very strong supporter. One of the reasons they're main shareholder is that we did a debt to equity debt conversion, as well as a bit of a cash side. So they are in for the long term, and we work very closely with them.